good question recently. We've got this several times over the years. And the question is, how much should I contribute into a policy? And this can be a difficult question to ask. So really we want to consider our individual circumstances and how we plan on using a cash value life insurance policy. So a cash value life insurance policy, what is it? There's really two classifications of people we work with that usually fit in, and sometimes it's both. So a cash value life insurance policy, what it is a safe, liquid, tax-free savings asset, tax-free if I do everything properly, but area I can position money. Right? I have access to it. It's a fixed asset, not invested in the market or anything like that. So usually individuals that approach cash value life insurance fall in one of two categories. Cash value insurance, the first is someone that says, hey, this is a safe, fixed asset, almost a bond alternative. Depends on their preference, really. They say if I'm going to yield, if we go conservative here, somewhere between 3 to 6%, it's also tax-free. If someone's in a 30 or 40% tax bracket, here's an area I can position money, regardless of what happens with the market. It's going to continue just to produce a fixed return. Might vary a little bit each year, but it's going to go nowhere but up. So again, to the question, how much should I pay in? Well, if I am allocating my portfolio, how much do I want to direct to my fixed asset portion? Maybe it's 5%, maybe it's 10%. It is really 100% a matter of preference, right? Since we can't direct or give advice on how much one should pay into a policy. The second category, someone that wants to practice IBC. I want to pay money into a policy and I want to use the cash. All right, I want to use it for real estate. I want to use it for my business, for other assets, whatever it might be. So the question is, if I want to buy real estate, maybe the properties I'm looking at range from $100,000 to $200,000. Well, how much do I need to flow through the policy to be able to do that quickly? So that's one category. The other category, and sometimes people will fall in both. So really, how much should I contribute? It is a matter of preference. The one way I like to phrase it, if we're kind of looking at this or we're struggling with how much should I pay in, you know, I'm thinking about X amount of dollars, but I don't want to go too aggressive, is the question we'll always ask is, how much do I want the ability to contribute? On any given year, how much do I want the ability, not to commit to this, but how much do I want the option to pay into the policy if things go well? For example, if my target, or in a perfect world, is $50,000, here's what we would do. This is a way we can ease into the policy and never have it feel like a burden, is going back to the policy design. Where can my money go? Premium. Cash, which is my PUA rider. And the company's flexibility features will be important here. But if I want the option to pay in $50,000, we've referred to our 1090 split in several segments. I can literally set up a $5,000 minimum premium. I've got to cover the cost of the term rider as well. So let's say that's another $1,000. We're just going to round up, a total of $6,000 per year. And then depending on how flexible the policy in the company is, I could literally commit to that and add more cash into the policy at leisure. Whether I throw another $10,000 in over the course of the year, 0, $30,000, maybe I throw in another 45, that plus the minimum premium, I hit that total 50. Main point is, how much do I want the ability to pay into a high yield, safe, tax favorable asset that's liquid? I have access to it all the way through. Whatever that number is, I want to set my MEC limit there, and I want to set my premium at 10% of that. This really allows me to design a lot of flexibility. Again, minimum commitment, ability to add more cash at my leisure. What this also does is I give myself a better chance of not having to always open up multiple policies. If I get things right with the first policy, I'm setting myself up for way more success. Simple reason being, what's the worst part about these policies? First year, first and second year sometimes. Best part is every year after that. So if I can continue to feed the policy as the years pass and not have to go through new insurance expenses, it puts me in a much better position. So how much should I contribute? What I like to do is look at how much I want the ability or option to pay in, but really we should look at how we want to approach the policy overall. Hope this was helpful. More to come.